Namaskar, good afternoon, warm welcome you all dear viewers and learners on this CIT NCERT's live and interactive session, and you all are watching us on eVidya channel number 12, and beside this on our official YouTube channel, that is NCERT official. My name is Srijan Rajput, and there are so many mediums to connect with us on this live interactive session. So we have a topic for class 12th on economics, government's budgets and its component. So if you have any questions, any query in your mind, please feel free to connect with us. There are so many medium. First of all, you can make a call to us on, the number is on your screen, that's 8800440559, and beyond this medium you can write a mail to us on dth.class12@ciet.nic.in. Beyond these two mediums, you can connect through our official YouTube channel NCERT official's live chat box option. So feel free to connect with us, and we have a topic for class 12th, economics, government budgets and its components. So we have a guest in the studio, Ma'am Pooja Kapoor. Ma'am, namaskar.
Namaste,
welcome.
ma'am. Good afternoon.
Ma'am is a head of Department Economics, Modern School, Barakhamba Road, Nai Delhi. So ma'am is with us, and we have a topic. So shall we begin? Yes?
Yes, ma'am, of course. So, children, government budget and its components. We start with the first slide that I'll show you, learning outcomes. What is the meaning of government budget? What are its objectives? How do you define different components? What are revenue receipts? What are capital receipts? What is revenue expenditure, capital expenditure, and different measures of government deficit? Okay, let us start with the introduction. Why do we need a budget? In the modern world, every government aims to maximize welfare in a country. Therefore, it needs a number of infrastructural, economic, and welfare activities. Now, all these activities need huge expenditure to be incurred. Therefore, it requires planning, it requires policy, and what does a budget do? It helps in planning and in framing these policies. Please remember, this is a general introduction to the need of a government budget. Now, what is the meaning of the word budget? The budget is derived from a French word budgetie, which means a leather bag or a wallet. So, you will usually see a finance minister carrying the budget in a leather bag before the parliament session, and it is a financial plan of a government. Now, very important CBSE definition. Remember children, this chapter is for 6 marks in the board examination. Budget is an annual statement. Underline the word annual statement, showing item wise estimates, very important. These are not actual, these are estimates of receipts and expenditure during which year? Fiscal year. Fiscal year, remember children, is not the calendar year, it is the fiscal, it is a financial year, and the fiscal year is considered from the 1st April to 31st March of the next year. So, let us say 1st April 2023 to 31st March 24 is the fiscal year or the financial year for this year. Okay, remember, so again I repeat the definition, annual statement showing item wise estimates, not actual values of receipts and expenditure when during a fiscal year. Now, important points of a government budget. It is prepared at all levels, central, state, local, but in this analysis we will be restricting ourselves to the union budget. So, there are estimated expenditures and estimated receipts, and in India, when is the budget presented? By convention, it is presented on the first working day of February every year. Remember, first working day of February every year, and it is required to be approved by the parliament before it can be implemented. Now, very important, one question definitely in the board examination you generally tend to get on the objectives of a government budget. Primarily, the first 3 are very important. Alright, but I will do 2 more with you, or rather 3 more with you. Reallocation of resources, reducing inequalities of income and wealth, economic stability, financing and management of public sector enterprises, economic growth and lastly reducing regional disparities. Let us look at the first objective. The first objective is the allocation function of the government or the reallocation of resources. Now, through the budgetary policy, what does the government do? The government aims to reallocate resources in accordance with the economic and social priorities of a country. Therefore, the government will try to give tax concessions or subsidies to producers, like it will tax goods which are harmful in consumption like liquor, cigarettes. So, these goods will attract high taxes, but on the other hand, to keep its welfare position in mind, the government will subsidize khadi products, alright, it will give subsidies on these products to the producers. So, therefore, if it wants to encourage, it will give subsidies. If it wants to discourage, it will impose high taxes. Secondly, if you as you can see on your PPT, that it directly produces goods and services. So, there are many non-profitable economic activities which are not undertaken by the private sector. Why they are not undertaken by the private sector, children? Because these activities do not attract profits and there is a huge investment expenditure involved. So, what happens? The government has to pitch in. Why? To raise the welfare of the people. And what are these activities like? Water supply, sanitation, and all these activities are in public interest and they raise social welfare. Next, why are public goods provided by the government? So, two features of public goods is another very important question. Public goods are those goods and services which are collectively consumed. It is not possible to exclude anyone from enjoying their benefits, and one person's consumption will not reduce the availability to the others. Now, remember this definition, children, and remember two features of public goods. First, they are non-rivalrous. What does non-rivalrous mean? That the benefits of a public good are available to all, to everybody, and are not restricted to one particular customer. For example, if we consider a public park or a street light, what happened? The benefits of the park or that street light will be available to all. That means it is non-rivalrous. Second, it is non-excludable, which means that in case of public goods, there is no possible way to exclude anyone from enjoying the benefit of a good. Due to this reason, a public good is non-excludable, which means even if you do not pay, if the users do not pay for it, it is difficult to exclude them or to collect fees for the public good. So, these non-paying users are called free riders. So, they are non-rivalrous and they are non-excludable. Second objective, the budget aims to reduce inequalities in income and wealth. Now, inequality is an inherent part of every economic system. So, what will the government do? It will try to reduce its inequalities. How? It will impose tax on the rich. Now, if it imposes tax on the rich, what happens? It will reduce the purchasing power of the rich and it will reduce their personal disposable income. Secondly, the government will try to spend more on the welfare of the poor by giving them free LPG gas concessions, by giving food grains to some people below the poverty line. And with all this, what happens? It will try to reduce inequalities in the distribution of wealth. So, this is, remember children, the distribution function. If the question says what is the distribution function, it is nothing but reducing inequalities in income and wealth. Then comes the third major objective, stabilization function or economic stability. Government budget is used to prevent business fluctuations of inflation or deflation with the aim to achieve economic stability. What are inflationary tendencies, children? When aggregate demand is higher than aggregate expenditure. Now, what does the government do? The government can increase taxes or the government can decrease its non-development expenditure. So, increase taxes and decrease expenditure. When does the government do this? When there is inflation. And what does the government do during deflation, or what happens when there is deflation? First let me make you understand this. Deflation is a situation when aggregate demand is less than aggregate supply at full employment. So what will the government do? It has to give a push to the aggregate demand. So the government will give tax concessions or the government will increase its expenditure.
Okay.
Right. Then you have financing and management of public sector enterprises which are managed for social welfare, and they have the objective of making various provisions by providing them, the government provides them financial help. Then you have economic growth. Economic growth means there is an increase in the real GDP of an economy. That means the government tries to increase the volume of goods and services, and two ways it can do so. The government provides tax rebates and incentives for various productive ventures. Therefore, it stimulates savings and investment in a country. Then the government can spend on infrastructure. Alright, it can make various bridges, roads and different productive activities so that it generates demand, it generates employment, and this induces growth in the private sector as well as the public sector. Then another very important objective of the government is reducing regional disparities. Reducing regional disparities means it will through its taxation and expenditure policies, it will set up production units in economically backward areas so that it promotes their economic development. Now let us look at budget at a glance. How does budget at a glance look? So I will explain you all the components properly. Pay attention to them. There is something called revenue receipts, which is tax and non-tax. There are capital receipts, both of them make up total receipts. Then there is total expenditure, which is revenue expenditure and capital expenditure. And then you look at point number 15, 17 and 18, which are three types of deficits in the budget. Now budget at a glance, that means if you see a budget at a glance, you will see where does the rupee go to and where does the rupee come from. Basically, you have to understand that these two pie diagrams denote that there is something called as government receipts and there is something called as government expenditure. Broadly, a rupee is coming from taxes and non-taxes and borrowings. And where does the rupee go to? The rupee goes to basically financing your defense, financing your subsidies, financing your state expenditure. Alright. Now come to two components of the budget, revenue budget and capital budget. Estimated receipts and expenditure of the central government that relate to the current financial year are included in the revenue budget. So it focuses on current financial needs, and capital budget is estimated receipts and expenditure that concern asset and liability of the government, and it focuses on investment of a country's capital stock. Now I want you to pay attention to this diagram, which is regarding revenue budget, revenue receipts and revenue expenditure, capital receipts and capital expenditure. And I want you to understand the definition through this very simple diagram that I am going to explain you now. So components of government budget. Alright. Now pay attention children, you will never go wrong by this trick. Alright, if you remember this very carefully. They are divided on the revenue side and on the capital side. Alright. So this is the revenue budget and this is the capital budget. Now children, in the revenue budget, if I draw this, there are revenue receipts and there are capital receipts. Pay attention to this. This is a very important 6 marker, and children often go wrong in understanding the asset and liability part of this. And similarly, on the capital side, there is capital receipts and there is capital expenditure. Alright. Now, when you talk of revenue receipts, always start with this arrow, increase in liability, decrease in asset. So, on the revenue side, you have to start with this arrow, increase in liability and decrease in asset. On the capital side, reverse the arrows. You have decrease in liability and increase in asset, both on receipt and expenditure side. So, decrease in liability, increase in asset. So, this is point number 1. So, when you start on the revenue side, start with increase in liability, decrease in asset, and when you start on the capital side, you reverse the arrows. Point number 2. On the revenue side, use the word neither nor. So, on the revenue side, on the receipt side, so whether it's revenue receipt or capital receipt, use the word neither nor. So, let us look at the definition of revenue receipt. Revenue receipts are those receipts that neither increase liability nor decrease asset. I repeat, revenue receipts are those receipts that neither increase liability nor decrease asset, means both conditions are satisfied. What are capital receipts, children? That neither decrease liability nor increase asset. That neither decrease liability nor increase asset. Again, both conditions should be satisfied. So, when you define them, be very careful of what you are writing in the paper. Then what are capital receipts? Capital receipts, either you use the word either or on the capital side. Either or means any one condition is satisfied. So, what are capital receipts? That either increase liability or decrease asset. What is capital expenditure? That either reduces liability or increases asset. Alright. So, having said this slide that I am showing you, which should make a lot of sense. That means government receipts are revenue receipts that neither create any liability nor reduce any asset. I explained you that trick on very carefully. So, revenue receipts are made up of tax and non-tax revenue. Revenue expenditure that neither creates an asset nor reduces a liability. So, both conditions are satisfied. Again, capital receipts that either create a liability or reduce an asset, and capital expenditure that either creates an asset or reduces a liability. Either or may, what happens is only one condition is satisfied. So, budget receipts and budget expenditure. So, budget receipts is the estimated money receipt of the government from all sources during a financial year. Now, budget receipts are made up of two types, as I showed you, revenue receipts and capital receipts. So, revenue receipts are again divided into two types: sources from tax, which are tax revenue or tax receipts, which are made up of direct taxes like income tax, corporate tax, etc., and indirect taxes where you have GST, customs duties, etc. Non-taxes is sources other than taxes, alright, where you have profit, license, escheat, forfeitures, interest, fees, fines, penalties. You can have gifts, grants, or you can have special assessments. Then you have capital receipts, which are made up of three types, which either increase liability or decrease asset, which is borrowing, recovery of loans, and other receipts, other capital receipts. Now, revenue receipts, again pay attention, they neither create a liability nor reduce an asset, which means they satisfy both conditions. Alright. So, this is very important for you, and they are receipts which are regular, which are recurring, and they will follow these two essential conditions. Now, what is the difference if the paper says that if there is a question, what is the difference between a tax revenue and a non-tax revenue? Remember, tax is a legally compulsory transfer payment made by the people to the government. You cannot escape it. Alright. And tax is a revenue earned by the government from taxes levied on income, wealth, commodities. That means there is a difference between a direct tax and an indirect tax, which I will be coming to. Then a non-tax revenue are receipts from income from other than taxes. Alright. Now, there are four types of non-tax which usually come in the paper: dividend, interest, profit, and grants. Alright. So, sources of income from the government, from these mainly primarily you will get dividends on shares or something like that by the government or received by the government, are all a part of the non-tax revenue. Now, taxes, Direct taxes, indirect taxes, another very important question. What are direct taxes and what are indirect taxes? Direct taxes are levied on individuals and companies. Indirect taxes are levied on children, goods and services. Burden of the direct tax, very important, cannot be shifted, which means the impact and incidence lies on the same person. If I am levied income tax, the impact and the incidence of the tax is on me. And indirect tax, what happens children? The impact and incidence is on different persons. Like I have given you an example. In case of GST, a goods and service tax, look at the example below. The liability to pay the tax or the impact is on the seller. But what does a seller do? It shifts the burden or the incidence on the consumer. So, the seller collects this GST from them. So, the burden of the indirect tax can be shifted, right? And direct taxes are progressive in nature. Usually what happens, as income increases, you will increase the level of income tax, and generally it is seen indirect taxes are proportional in nature. And direct taxes will have a limited reach because they are on individuals and companies, whereas indirect taxes have a wider reach. Why? Because they are levied on goods and services. Now come to capital receipts. They either create a liability or reduce an asset. So, it will satisfy only one condition. Now, capital receipts are basically of two groups. So, out of the three examples, I have made three examples into two groups. Remember this very carefully. Borrowing is a capital receipt because it increases liability of the government. Either or का मतलब बेटा one thing happens, liability बढ़ रही है. So government can borrow from RBI, from foreign governments, from IMF. So why is borrowing a capital receipt? अगर question आता है, because it increases liability. So it is a debt creating capital receipt. What are two types of non-debt creating capital receipt? Recovery of loans. So government grants loans to various state governments and union territories, and when the government recovers these loans, it reduces the asset of the government. Liability नहीं बढ़ाता, it reduces the asset of the government. Therefore, recovery of loans is a non-debt creating capital receipt. Then you have disinvestment. Disinvestment is an act of selling a part or the whole of shares held by the government. Now, when the government sells these shares, what happens? It reduces the asset of the government. Therefore, it is a non-debt creating capital receipt. And small savings are like borrowings. So, they will increase liability. So, again please remember, I will just recapitulate my previous slide. There are two types of capital receipts, debt creating and non-debt creating. Debt creating means borrowings. They will increase liability. So, government borrows from the public sector, from the RBI, all will increase liability. Non-debt creating, they do not give rise to debt. They reduce the asset of the government. And basically, they are of two types, disinvestment. Disinvestment का बेटा दूसरा नाम होता है sale of shares in PSUs. Alright, sale of shares of PSUs is disinvestment. अगर एग्जाम में आता है. And recovery of loans. इसमें debt नहीं चढ़ता because it reduces the asset of the government. ये याद रखना बेटा, ठीक है. So revenue receipts और capital receipts का एक बार फटाफट recap करते हैं. Revenue receipts neither create a liability nor reduce an asset. Capital receipts create a liability or reduce an asset. Their revenue is regular and recurring. On the other hand, capital is irregular and non-recurring. Revenue में there is no future obligation to pay. And capital receipts में if there is a borrowing, there is a future obligation to pay along with interest. And then you can give the examples as your fourth point. Now, you can have some questions in the paper where you can be asked, identify them as revenue and capital, like loan from the World Bank, borrowing. Capital, why? Because it increases liability. Tax is revenue, why? Because it neither creates any liability nor reduces an asset. Again, grants is a revenue receipt, give the definition of revenue receipts. Profits is a revenue receipt, give the defined revenue receipts. And sale of PSUs is disinvestment. It is a capital receipt, why? Because it reduces the asset of the government, only one condition. Alright, so you can have all these as your application based questions in the paper on this particular concept. Now I come to budget expenditure. Budget expenditure is revenue expenditure and capital expenditure. What is revenue expenditure? Neither it creates an asset nor it reduces any liability. So revenue expenditure is again recurring. It is on the normal functioning of the government. Children, if I give you 6 examples, alright, generally in the paper you will get these 6 examples broadly speaking to identify, which is expenditure on salaries, subsidies, scholarship, pension, interest and grant. So expenditure on salaries, subsidies, scholarship, pension, interest and grant. Besides this, you can have expenditure on administrative services, you can have expenditure on defense services, health services, all as revenue expenditure. Now, Delhi Metro is not revenue expenditure. Why? Because it leads to creation of asset. Remember, revenue expenditure has to neither create an asset nor reduce a liability. Now, come to capital expenditure. It satisfies only one condition. What is that condition, children? Either it creates an asset or it reduces a liability. So, you have to be careful. When you come to the capital side, you have to be careful in your answer. Alright. Now, capital expenditure either creates an asset. See, it is construction of a school building. If you see the slide picture on the side, or it is recovery of loans. Recovery of loans is a capital expenditure. Why? Because if I have repaid my loan, alright, if I have repaid my loan, what will it do? It will lead to reduction in liability. And these are non-recurring in nature. Now, every capital expenditure will add to the capital stock of a country, of an economy. It will increase its productivity and it is during a long period of time, like a metro or a flyover. These expenditures usually create an asset. So, school building construction is a capital expenditure. Why? Because it leads to creation of asset. So, again salaries, subsidies will not be capital. Why? Because it is recurring. Alright, you are neither creating an asset nor reducing a liability. Again, loans to state and union territories is all a capital expenditure. So, then you have different types of expenditure which can come in the paper. Plan expenditure is incurred on the 5-year plans, alright. It can be in the primary sector, secondary sector, in agriculture, or it can be projects covered by the central plans. And non-plan is any other expenditure other than expenditure related to 5-year plans and schemes. Then you have different types of other bifurcation of expenditure. It can be developmental, it can be non-developmental. Development refers which is basically directly related to your economic and social development, alright. And expenditure on such services is usually a part of the functioning of the government. It adds to the flow of goods and services. Non-development will not contribute to economic development and it is essential from the administrative point of view. Now, let us do two differences, another very important question in the paper, difference between revenue expenditure and capital expenditure. Meaning, revenue expenditure will neither create an asset nor reduce a liability. Capital expenditure will create an asset or it will reduce the liability of the government. Purpose, revenue is recurring, it is important for normal running of the government departments and provision of various services. Capital is for acquisition of assets and for granting of loans. Then you have examples which you should always give whenever you are asked a difference question or a meaning question or a definition question. Please give the definition and give the example. So, when you are asked about revenue expenditure, you can give any example: salary, pension, scholarship, subsidies. And capital mein you can give acquisition of a capital asset, construction of a building, acquiring land and repayment of borrowing. Repayment of borrowing will reduce liability. Now, these are application based questions in the paper. So, why is subsidy, classify subsidy as capital or revenue? Subsidies is a revenue expenditure. Why? Because it neither creates an asset. Whenever you are asked a revenue side, whether it is revenue receipt or revenue expenditure, you have to define the entire term. So, revenue expenditure because it will neither create an asset nor reduce the liability. But defense capital equipment purchased from Germany, if this is given to you, it's a capital expenditure. Why? Only one condition, children. Alright, either it is creation of asset or reduction of liability. So when you acquire an equipment, it will increase the asset of the government. Grants given to state government. Now grants is a revenue expenditure. Why, children? Because it will neither create an asset nor reduce the liability. So having said this, I have finished two major parts of the chapter, children, which is objectives and components of government budget. Now we come to the part of deficits. Before I explain you deficits, you must understand what is a balanced budget and what is an unbalanced budget. An unbalanced budget comprises of surplus budget and deficit budget. Now, measures of government budget. Budgetary deficit is defined as the excess of total estimated expenditure over total estimated revenue or receipts. When the government spends more than it collects, like in a family, if you spend more than what you are earning, your budget will go into deficit. It is called, similarly with the country, it is called a budgetary deficit. So let's see, if I show you this diagram, the country economy is spending, let's say, $12,000, but it is earning only $10,000. So this economy is going into a deficit of $2,000. Deficits can be of three types, and every deficit is very important. Its meaning, its implication, and there will be numericals on this concept. There can be numericals from this concept, which is revenue deficit, fiscal deficit and primary deficit. What is revenue deficit? Revenue deficit, if I see the formula, look at the formula, the red formula below, it is revenue expenditure minus revenue receipts. Alright, it is revenue expenditure, that means expenditure on salaries, subsidies, pension, interest, grant is recurring expenditure of the government. What are revenue receipts? Revenue receipts neither increase liability nor decrease assets. It can be tax, it can be non-tax. So when I did receipts with you, I did two types of revenue receipts. So when I spend more and I earn less, I go into a revenue deficit. Right? And it signifies, children, look at point number 2 in the PPT, that the government's own revenue is insufficient to meet its expenditure. So it is a cause of concern, and it also is a very important component of fiscal deficit. That is why it prompts the government to borrow. Alright. Now, what are the implications of revenue deficit? Very important. It indicates the inability of the government to meet its regular and recurring expenditure in the budget, which means, as we do in a house, if I cannot meet my regular expenditure in a month, what will I do? Either I will dissave or I will borrow. Similarly, same concept you can apply to the government. The government will first try to meet this revenue deficit maybe by dissaving. That means the government will use up its saving or from the savings of from the other sectors of the economy to finance this expenditure. It also implies the government can make up this deficit from capital receipts. Now, capital receipts are debt and non-debt. Debt is borrowing and non-debt is reduction of assets. I just revised this with you when I did the components. Now, use of capital receipts to finance the extra consumption expenditure leads to an inflationary situation in the economy. This is very important. Use of capital receipts, whether it is borrowing, whether it is disinvestment, whatever it is, if it is used to meet the consumption expenditure in an economy, it will create inflationary tendencies in that economy. And a high revenue deficit definitely is a warning signal to the government that please curtail your expenditure. Alright, because you are spending way more than you ought to, and reduction in government expenditure therefore the government should take serious steps in particularly reducing expenditure which is unproductive or unnecessary in nature or non-developmental in nature. Now come to the second deficit, which is a fiscal deficit. Fiscal deficit is total expenditure minus total receipts, children, excluding borrowings. I repeat, total expenditure minus total receipts excluding borrowings. Borrowings इसका पार्ट नहीं है, ठीक है, प्लीज रिमेंबर दिस. सो फिस्कल डेफिसिट अकर्स व्हेन total expenditure exceeds the revenue that it generates, excluding money from borrowings. What does a fiscal deficit do? It presents a more comprehensive tool for explaining the budgetary development in India, and it indicates that the government is spending, definitely spending beyond its means. Now, this is a very important formula that I have placed before you, and it will help you to solve many numericals in the paper regarding fiscal deficit. Look at the first point. Fiscal deficit is total expenditure minus total receipts excluding borrowings. Now, what is total expenditure? Look at the second point. Fiscal deficit is equal to total expenditure, bracket में लिखो बेटा, revenue expenditure plus capital expenditure, close the bracket, minus रेवेन्यू रिसीट्स. आपके पास देखो टोटल रिसीट्स आ रहा है, टोटल रिसीट्स में क्या है, दो रिसीट्स है, रेवेन्यू रिसीट्स प्लस कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग्स. अब इसका एक और नाम आपको बताया जाता है. व्हाट आर कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग्स? क्या होंगी बेटा? नॉन डेट कैपिटल रिसीट्स. व्हाट आर कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग चिल्ड्रन? नॉन डेट कैपिटल रिसीट्स. इसको याद रखो. Capital receipts excluding borrowing are non-debt capital receipts. इसमें क्या आएंगे बेटा? इसमें दो receipts आएंगी. एग्जाम में ये भी दिया जा सकता है, रिकवरी ऑफ लोन्स प्लस डिसइन्वेस्टमेंट. तो आपको न्यूमेरिकल में ये भी दिया जा सकता है, ठीक है, रिकवरी ऑफ लोन्स प्लस डिसइन्वेस्टमेंट. नाउ फिस्कल डेफिसिट इज इक्वल टू, अब हमने रेवेन्यू चीज़ों को इकट्ठा कर लिया बेटा. नेक्स्ट थर्ड स्टेप में रेवेन्यू एक्सपेंडिचर माइनस रेवेन्यू रिसीट्स प्लस साइन बाहर ले लो बेटा, प्लस कैपिटल एक्सपेंडिचर माइनस कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग्स. दोबारा देखो, हमने रेवेन्यू टर्म्स को इकट्ठा किया. सो फिस्कल डेफिसिट इज इक्वल टू रेवेन्यू एक्सपेंडिचर माइनस रेवेन्यू रिसीट्स प्लस कैपिटल एक्सपेंडिचर माइनस कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग्स. इसका मतलब क्या हुआ बेटा? फिस्कल डेफिसिट रेवेन्यू एक्सपेंडिचर माइनस रेवेन्यू रिसीट्स क्या होता है बेटा? अभी ये पहला डेफिसिट मैंने आपको बताया था, इट इज रेवेन्यू डेफिसिट. रेवेन्यू एक्सपेंडिचर माइनस रेवेन्यू रिसीट्स क्या होता है बेटा? रेवेन्यू डेफिसिट प्लस कैपिटल एक्सपेंडिचर माइनस कैपिटल रिसीट्स एक्सक्लूडिंग बोरोइंग्स. या हम इसको ये भी लिख सकते हैं दैट फिस्कल डेफिसिट इज इक्वल टू बोरोइंग्स. इसका बहुत इम्पॉर्टेंट एक फॉर्मूला में एक बहुत इम्पॉर्टेंट पॉइंट आता है दैट रेवेन्यू डेफिसिट इज अ वेरी इम्पॉर्टेंट पार्ट ऑफ फिस्कल डेफिसिट. दैट मीन्स अ लार्ज शेयर ऑफ रेवेन्यू डेफिसिट in fiscal deficit indicates that a large part of borrowings is used to meet government consumption expenditure rather than investment. And if I see the last part, the last formula, fiscal deficit is equal to borrowings, that means the government is borrowing from all sources, borrowings from home, borrowings from RBI or borrowings from abroad. So please remember this formula, and it says it basically exemplifies two important questions that show how fiscal deficit is equal to borrowings. Or second question, is revenue deficit a part of fiscal deficit? And the answer is yes. Now what is the implication of fiscal deficit? Fiscal deficit means I borrow, alright. Not only I borrow, borrowing means that I not only have to pay the principal amount, but I also have to pay interest. Now children, this is a very important line. Now this is something that a country gets caught in a situation called debt trap. That a country, when you borrow, you not only have to pay the principal amount, but also you have to pay the interest. And expenditure on interest is your revenue expenditure. Revenue, alright. So if you have to pay interest, you will be increasing your revenue expenditure, your recurring expenditure. If you increase your revenue expenditure, what do you increase, children? You increase your revenue deficit. Look at the fourth point in the formula. If you increase your revenue expenditure, you increase your revenue deficit. And if you increase your revenue deficit, you increase your fiscal deficit. So, this continuous chain of revenue deficit and fiscal deficit is nothing but the country gets caught in a situation of debt trap. You are living beyond your means. So, it is bad for an individual, it is bad for a country. Alright. So, this is a situation of a debt trap. So, government borrows from the RBI to meet its fiscal deficit. Also, the country is borrowing from the rest of the world, and if the country borrows from any country, alright, or any international agency, what is happening? We are raising our dependence on that country. We are being dependent on them. And lastly, borrowings will increase our financial burden because we have to repay the principal amount along with the interest. So, these implications of fiscal deficit are really important. Now, what are some of these sources of financing fiscal deficit? Fiscal deficit can be met by borrowings from internal, or it can be met from external sources, and or the government can borrow from the RBI against its securities to meet fiscal deficit. Now, there is very important a competency based question. The governments across the nations are very worried about the term fiscal deficit. Now, is fiscal deficit necessarily inflationary in nature? Now, children, remember, fiscal deficit, although it indicates the total borrowings of the government, but only if you are issuing new currency, it will be inflationary. But if we are using this borrowing for productive purposes, alright, building bridges, building dams, or increasing your infrastructural development projects, or which will lead to capacity building, then it will not be inflationary in nature. So, you have very important question here, that do you think fiscal deficit is necessarily inflationary? So, the answer is yes, and the answer is no, depending on what context are you explaining in the, you are explaining as an explanation to this. Now, the last deficit that I am going to do is the प्राइमरी डेफिसिट। अब इस फॉर्मूला को याद करने का एक बहुत सिंपल तरीका है, इन एन अल्फ़ाबेटिकल सीरीज ए टू जेड पी एफ के बाद आता है, ठीक है। ये बच्चे बहुत कंफ्यूज हो जाते हैं बिकॉज ये एमसीक्यू में इसको किसी भी तरह ट्विस्ट करके दिया जा सकता है। सो द करेक्ट फॉर्मूला इज दैट प्राइमरी डेफिसिट, पी कम्स आफ्टर एफ, सो पी को पहले लिखो, प्राइमरी डेफिसिट इज इक्वल टू फिस्कल डेफिसिट माइनस इंटरेस्ट पेमेंट्स, या इसको एग्जामिनर ऐसे भी लिख सकता है बेटा, फिस्कल डेफिसिट इज इक्वल टू प्राइमरी डेफिसिट प्लस इंटरेस्ट पेमेंट्स। तो आप एक फॉर्मूला याद करो ये वाला, दूसरा आपको ऑटोमेटिकली इसको आपको एग्जाम में करना आराम से हो जाएगा। सो व्हाट डज प्राइमरी डेफिसिट मीन? इट इंडिकेट्स हाउ मच द गवर्नमेंट बोरोज टू मीट एक्सपेंडिचर अदर दैन interest payments, and the difference between fiscal deficit and primary deficit shows the amount of interest payments made on borrowings। अब देखो बेटा, fiscal deficit तो क्या हो गया बेटा, फॉर्मूला देखो, it means borrowing requirements of the government। primary deficit मतलब होता है current borrowing requirements other than making interest payments, so interest payments माइनस हो जाती हैं। और interest payments क्या होती हैं बेटा, that the government is borrowing to make interest payments on accumulated debt, जो debt पीछे है उस पे government borrow कर रही है in order to make those payments। Now what is the implication of primary deficit? Primary deficit का मतलब है government borrows are going to meet expenses other than interest payments, and the difference between fiscal deficit and primary deficit means the amount of interest payments made on borrowings in the past। Even if the country has, children, low or zero primary deficit, alright, it means that interest payments on earlier loans have forced the government to borrow। अब इसको मैं तुम्हें दिखाती हूँ, ये देखो, look at this slide, what happens when primary deficit is zero? Let us assume the country is having no primary deficit। Now primary deficit is equal to fiscal deficit minus interest payments, primary deficit zero है, इसको zero डाल दो, that means fiscal deficit is equal to interest payments। इसका मतलब क्या हुआ, fiscal deficit का दूसरा मतलब क्या है बेटा, borrowings। इसका मतलब even today that country has to borrow, that government has to borrow। Why? Not only on account of interest payments on accumulated debt in the past, So, even a low primary deficit is a cause of concern. Alright. Now, let us look at this application based question. The Government of India's budget for the year 13-14, the Finance Minister wants to raise taxes on cigarettes. He also proposes to raise income tax on people earning more than 1 crore per annum. Question is, identify and explain the type of taxes proposed by the Finance Minister. Was the objective to earn revenue, and what is the possible welfare objective? Now children, first identify, this is a question on taxes. You have to identify what is a direct tax and what is an indirect tax. Now taxes on income will come under direct taxes. So your 1 crore per annum tax is a direct tax. Your tax on cigarettes is an indirect tax. So GST is an indirect tax. What is an indirect tax? Where the payer and the bearer of the tax are on different people. And income tax, which is levied on people which is income higher than 1 crore, is a direct tax. The payer and the bearer of the tax is the same person. Now what is the objective? The objective is raising more revenue, and it serves the same welfare objectives. Firstly, raising loan services taxes on figures will basically make cigarettes smoking, discourage cigarette smoking. It will improve the health of people and raise their welfare. Then raising income tax on people above 1 crore. What objective will it suffice? It will reduce the gap between rich and poor. It will reduce income inequalities. And thirdly, whatever money the government gets by these higher taxes, what can the government do? It will increase, it can devote this money to welfare needs like health, education, welfare enhancing schemes, and improve the welfare of the people. So basically these are application based questions. Don't get disturbed, don't look at the question very carefully, identify the taxes, and then once you identify the taxes, go on to the section of objectives, the first section that I did with you, alright, and see which kind of an objective these taxes is going to serve. Now let me do one numerical part of it with you also. So one numerical is calculate the value of fiscal deficit and primary deficit. Again, a very important offshoot of your deficits. Apart from their formula, you can get and implications, you can get a numerical on this. So in the question you are given revenue receipts and of 20 crores, capital expenditure of 15 crores, then you are given non-debt receipts. Receipts is 30 and interest payments are 4, and revenue deficit is also given to you as 10. Now first, because revenue deficit is given to you, fiscal deficit, use that formula that I did with you. Fiscal deficit is equal to revenue deficit plus capital expenditure minus non-debt creating capital receipts, alright, because this formula fits the bill very well. If you see the question, there is no way to calculate revenue deficit because revenue expenditure आपको नहीं दिया हुआ, but आपको deficit दिया हुआ है. So substitute the values 10 plus 15 minus 10 and you get fiscal deficit as rupees 15 crores. Once you get your fiscal deficit, then you go to the third deficit, which is the primary deficit, which is fiscal deficit minus interest payments, and which is 5 minus 4, which is 11 crores. Like this, you can be given another example, another numerical. Now borrowings here, look at this question very carefully. You are given capital expenditure, you are given borrowings, you are given non-debt creating capital receipts, and you are given interest payments. Now what are borrowings, children? Borrowings is nothing but fiscal deficit, alright. So remember, if borrowings is only given to you in the question, it is nothing but fiscal deficit. And then remember, you use the same formula, fiscal deficit is equal to revenue deficit plus capital expenditure minus non-debt creating capital receipts. So 15,000 is equal to revenue deficit plus 5,000 minus 10,000, substitute the figures from the numerical. Therefore, you will get revenue deficit as equal to rupees 20,000 crores. Remember children, in your answer, never ever don't ever forget to mention the figures, the rupees, crores, or whatever value is given to you, because these also carry mark in the paper. And lastly, primary deficit is nothing but fiscal deficit minus interest payments, and interest payments are given as 25% of revenue deficit, which you calculate as 5,000 crores, and the answer comes as 10,000 crores. So basically I conclude my entire PPT, and any questions, ma'am, that I have?
No, ma'am, no new questions, but this is very clear by you, and each and every concept was clear now.
Thank you so much.
And in the beginning, we have a question that is, please explain the central government budget by Parnika. So let me quickly.
Okay, I'll go through the components of the budget, ma'am.
Yeah.
Should I go through the components of the budget? So, Parnika, your question that you have asked is related to this flow diagram. I will go through this flow diagram again one minute.
Yeah, once again.
Yeah.
Please.
So, components of government budget, children, please see this this flow diagram again. Revenue budget, which is made up of revenue receipts and revenue expenditure. What are revenue receipts? They neither increase any liability nor reduce any asset. Alright, so neither nor. Alright, remember in the revenue side, you will always have two words, neither nor, means both conditions will be satisfied. And revenue receipts, children, are made up of tax receipts, which is direct tax and indirect tax, and non-tax receipts or non-tax revenue, which is dividend, interest, profit, grants, which is sources other than taxes. Both are revenue receipts. Then you have revenue expenditure. Revenue expenditure is any expenditure of the government, again neither nor, that neither creates any asset nor reduces a liability. इसका एग्जाम्पल आप एक कोड लिख लो बच्चों, SSSPIG, salaries, expenditure on salaries, subsidies, scholarship, pension, interest, grant. ये 6 एग्जाम्पल के अलावा मुश्किल है कोई और आना, पर डिफेंस आ सकता है, एडमिनिस्ट्रेटिव आ सकता है, ऐसा नहीं है नहीं आ सकता. यूजुअली इसके अंदर आपको काफ़ी कवर हो जाएंगे, आपके काफ़ी टाइप्स ऑफ रेवेन्यू एक्सपेंडिचर यहाँ कवर हो जाएंगे. सैलरीज, स्कॉलरशिप, सब्सिडीज, पेंशन, इंटरेस्ट, ग्रांट्स, ये रेकरिंग खर्चा होता है. ठीक है, एनीथिंग दैट इज ऑफ रेवेन्यू एक्सपेंडिचर नेचर इज रेकरिंग इन नेचर. you have to give your salaries, you have to give your subsidies. So these are recurring expenditure of the government. But remember children, they will neither create an asset nor reduce a liability. दोनों कंडीशन सेटिस्फाई होती हैं. अब आ जाओ बेटा कैपिटल बजट पे. कैपिटल रिसीट्स एंड कैपिटल एक्सपेंडिचर. कैपिटल रिसीट्स क्या होती हैं बेटा? द रिसीट्स दैट आइदर क्रिएट अ लाइबिलिटी और रिड्यूस एन एसेट. तो या तो वो लाइबिलिटी क्रिएट करती हैं, जैसे बोरोइंग. वन कंडीशन, बोरोइंग क्रिएट्स अ लाइबिलिटी. हम आरबीआई से बोरो करें, हम फॉरेन कंट्री से बोरो करें, आईएमएफ से बोरो करें, हमें उस बोरोइंग को रिटर्न करें, हमारे लिए एक लाइबिलिटी है. सो इट इज़ अ डेट क्रिएटिंग कैपिटल रिसीट. रिडक्शन ऑफ एसेट मीन्स इट इज़ रिकवरी ऑफ लोन्स एंड डिसइन्वेस्टमेंट. कैपिटल एक्सपेंडिचर क्या हुआ बेटा? दैट आइदर क्रिएट्स एन एसेट और रिड्यूसेस अ liability.
Yeah, that's I think I'm sure Aparnika को ये जो concept है दोबारा से बहुत clear हो गया होगा. Ma'am, thank you so much for teaching this important chapter to all the viewers, all the learners, and the concept and the definitions given by you. That's very clear and that's very easy to understand.
Thank you so much, ma'am. Thank you.
So we are with Ma'am Pooja Kapoor. Ma'am is head of the department from Economics, Modern School, Barakhamba Road, New Delhi. Ma'am, thanks once again.
Thank you very much. Thank you, children, and best of luck.
So dear viewers and learners, now time to wrap up this particular session. We take your session on economics for class 12 students on the topic government budgets and its components. So time to wrap up, and my name is Trujan Rajput. Please be connected to us on CIT NCRT's all live interactive sessions. Take care of yourself. A very good evening. Namaskar.